everyone. This is Abhijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of July 7th, recording this on Sunday evening, July 13th. Last week, Bitcoin had a major breakout. It broke out above its May high at 112,000, hit a high of 119,000 over the weekend. We'll talk about some immense optimism from the legislation side with Bitcoin passing through Congress. It already had the Senate vote regarding stablecoins as a kind of regulation framework around it. So we'll talk a little bit about that. We'll show you the Bitcoin chart. And then we will tell you about the tariff concerns. So there was the July 9th deadline that has passed. It has been extended to August 1st, but since then, there's been announcements of new tariff rates, started off with South Korea and Japan. Those got a 25% tariff limit. Then we heard about from President Trump on Friday about Canada that had been increased to 35% on some of the goods. And then over the weekend on Saturday, we heard about a 30% tariff rate that was announced on Europe and Mexico. So we'll see what the stock futures are doing. Right now, it says that the stock futures are slightly lower on Sunday evening. We'll see what the 10-year yield is telling us. This week, key is the CPI data and PPI data, the consumer, the core and the headline consumer inflation, consumer price inflation, as well as the producer price inflation. So we'll see what those numbers do. There has been quite a bit of speculation about Chair Powell resigning. There's been issues about the headquarter spending, the claims of 2.5 billion spending with lavish expenditures planned, and then President Trump and his administration are claiming that there were lies from Chair Powell in terms of how they were presented to the Congress. So there is that, and then there is disagreement about rate cuts. Chair Powell is extremely concerned about tariffs causing inflation to be stickier than many think, and he's hence hesitant to cut rates. So, but there is the FOMC minutes came out on Wednesday, and there's been some disagreement in the FOMC about rate cuts. So we look at 10-year yield, we look at volatility, that kind of is a predictor of any price swings coming in the near futures. We look at from volatility into S&P 500, NASDAQ 100, ETF, QQQ, and then a key sector that has been outstanding in this rally is the semiconductor, and in particular the poster child of that NVDA. We'll talk about that as well. With that, let's go straight into our blog site. It's chartsarefun.substack.com. We tend to publish things at 7 a.m. on weekdays when the blog comes out. If you subscribe with your email, we'll get it out to you ASAP. It's free of charge. Our YouTube site is also called Chartsarefun. It's a channel called @Chartsarefun. Appreciate you subscribing to the channel, and if you like the videos, appreciate hitting like button. So as we said, Bitcoin had a major breakout. It took out its May highs at 112,000, touched a high of above 119,000 this morning on Sunday. So we'll just show you this article that talks about legislation votes coming up. So this is called the Crypto Week coming up. There is some key votes that the Congress will be voting on. One of them is called the Genius Act. That's about the regulation framework for stable coins. That's supposedly coming up as a key transaction framework for people to make large transaction payments. So that's there. And then there are other crypto-related regulations that will be voted on. Now, we'll see if this is buy the rumor, sell the news. We'll see how it all pans out. But if you look at the Bitcoin chart, join the trend line of the higher highs. So we can see that in December, the Bitcoin touched a high of 108.4 thousand, pulled back from there towards the 90,000 towards January, mid-January, and then from there had gone up to 109. So Bitcoin in that pullback that we got through the tariff into March and April had topped out a month before S&P 500. It topped out in mid-January at 109. Pull back to 74.4. That was the low set during the April 7th low, like most of the market. It also bottomed on April 7th. From there, sharply in a V-shaped move, came up to a higher high from the January high, touching 112. So if you draw in a trend line, a rising trend line across the highs, we can notice that on Thursday. So this is Sunday right here. Sunday of trading, it's at 118,000 now. That's Saturday, Friday, Thursday. On Thursday, it broke out above the 100 higher trend line, which is closer towards 113,000. It broke out and has been climbing. Now, key is if you look at these candlesticks, most of the candlesticks are not closing at the highs of that candle range. It is leaving a wick, reversal wick across each of the days. And then on Saturday, it kind of had an inside candle where the range of the candle was inside the previous day's range. Then since then, it broke out on Sunday. The highs was at 119,503. Right now, it's trading right at 119,774. So we'll see. We might have some upside momentum continuing to this week. A measured target depends on their multiple patterns here. If you look at the broader inverse head and shoulders, so there is a left shoulder here from 108 to 90 to 109, then a head from 109 to 74 up to 112, and then the right shoulder from 112 to 98 back up and breaking higher. This is a slanted inverse head and shoulder where the neckline is slanted, trending higher across the highs. That breakout from 74.4 to 112, you're talking about roughly 37.6. That is 37,600. Add 37,600 to 112,000. That measures to 149,600, which is close to around number 150,000 target. So that's what the bullish technicians are looking at. They're expecting this upside target at 150. It may not get there in a straight line. We might get a pullback, and that's what we got to watch. But right now, near term, there is a pattern here from the 110,500 to 98 to the 110,600. So that pattern and then a small handle, a very small shallow handle from the 110,600 breakout. So 98 to 110, you're talking about roughly 12,300. At the 12,300 to the 110,600, that's roughly 122,000 900 or 123,000. So that's what we are expecting this week as the legislation related bullish run continues to meet that 123,000 and then perhaps get a pullback to retest this neckline and and that's rising. So near that 112, 113,000. And from there, maybe the resume climb. But at least near term, we are looking for a test of a target at 123,000, 122,900 to be precise, and then from there, maybe get a pullback. Now, I mentioned that the tariff-related news became very much, concerning to the market. So the initial deadline was a 90-day deadline extending from the April 9th, and that expired on July 9th. That 90-day came, and before that came, the extension was moved on from July 9th to August 1st. And along that, first started off with Japan and South Korea getting hit with their tariffs at 25%. Then we got a 35% tariff, which came on Friday, hit onto the Canada with some of the goods out there. And then finally on Saturday, President Trump talked about EU, the entire European region, and the Mexico getting rates at high as 30%. So of course, now retaliation is less of a factor. Most of these countries are not retaliating back. They're reconsidering negotiations, so they have until August 1st. So that's kind of the high water mark, you could call it, and then they'll see if they can negotiate better deals. So perhaps we know that the default rate was sitting anywhere at the 10% for most countries. That was announced on April 9th. That default rate has also been extended from 10% to 15 to 20%. So most countries, they can negotiate a better deal, will end up getting a 15 to 20% terminal rate from August 1st. So overall, tariffs are there, but as we know, the market seems to be getting more resilient, pricing in a lot of these tariffs things. So we'll see what impact it has. But a bigger concern than the tariff is inflation. We know that the Treasury market follows inflation extremely carefully, and Treasury market is also where smart money trades. Here on the daily chart of the 10-year yield, the Treasury 10-year yield called TNX, we can see an inverse head and shoulder, small inverse head and shoulder forming over the last 3 or 4 weeks. So we can see a left shoulder, so a neckline around the 4.4%, left shoulder forming here, pull back up to the neckline, then a head at 4.2% up to 4.4, breaking higher. So 42.05 to 44.35, you're talking about 2.3. At the 2.3 to 44.35, you get 46.65. That's very close to the previous resistance that we saw in February before the market collapsed at 46.6. So potentially a retest of that 4.66%, which is 46.6, seems likely. That's not going to be good for the market. If the 10-year yield breaks higher at this inverse head and shoulder, higher rates will bring stocks down. Stocks don't like higher rates. It really raises their cost of borrowing, and we'll see what happens to the 10-year yield. There's also, as I said, the CPI and PPI data in the news this week on Tuesday and Wednesday, and earnings will start in earnest. We'll hear JP Morgan first and other big banks this week, and then most of the tech earnings will start coming out the following week. But with the big bank earnings this week, with the CPI, PPI on Tuesday and Wednesday, we'll see where this all lands up. And then, as we talked about, the speculation of Chair Powell resigning, and his last meeting could be this end of July. July 30th is where the rate announcements will come. And then you don't have an August date. The next date will be for rate cuts or rate decisions in September. We do have a Jackson Hole meeting, which has unbelievably been unpredictable in the past. A lot of market moving signals have come from Chair Powell at the Jackson Hole meeting. Typically comes around mid-August. But beyond that, right now, market will be watching the CPI, PPI, and this 10-year yield break higher is not going to be good. Now, a key indicator we are watching, call it the fear gauge indicator called VIX. It's also measured by the options in CBOE, the Chicago Board of Options Exchange. Primarily on the S&P 500 is what the VIX measures, the put calls, the volume of the puts and the calls. And when you see a VIX declining, which we have a huge decline from 60 that it peaked on the April 7th market bottom, it had peaked up to 60, extreme fear, extreme amount of put buying. From there, it has literally collapsed. 60 now down to below 16, tested 15.7 last week. Notice the pattern of lower lows in VIX levels, but higher lows in the RSI, the relative strength index, and higher lows in MACD, the momentum indicator, the moving average convergence divergence. This positive divergence pattern of higher lows as lower lows in VIX pattern indicates a reversal higher in VIX is coming. Something very interesting also, if you look at the last few months, around the mid of the month is when we start getting a volatility move higher. So we noticed that around May 19th level, between the week of 12th to 19th, it kind of bottomed out. And from the levels of low 17s, it went to 25. Then again, kind of the July 9th to 16th, that midweek of July, it bottomed out at 16.23. From 16, it went to 22. So we are right now at 15.7, below that 16. And we are right in the week of July 14th, this week. So this week, potentially, because the mid of the month is when we have a tendency the last 3 months for the VIX to go higher, looks like we're setting up for a higher volatility into next week. That's what we're watching. Now, what is an indicator of that is the S&P 500 daily chart. This also has a neckline joining the highs, just like the Bitcoin chart. And instead of the Bitcoin, which failed at 112,000 in May, S&P actually took it out, but didn't go far too far. It just went up a few points. Like this was more towards the 6,200. It went to 6,290, pullback, and tested that twice with a negative divergence. So higher high in S&P, lower high in RSI, that indicates a negative divergence, potentially a possibility that we could, since Bitcoin is leading the stock market and Bitcoin kind of took out its January high in May, we could have S&P took out its February high in early July. So in early July, it took out its February high of 61.47 and went up to 62.90. And now we had a red candle on Friday. We could decline below this neckline and have a pullback to test its rising 200. We do see a golden cross. The 50-day in blue is above the 200 and climbing. That's bullish. So the trend is bullish. That said, a pullback to test its 200-day, just like Bitcoin did. When Bitcoin tested that rising trend line of the neckline, it pulled back to test its 200-day moving average. The 200-day was 97. It didn't get quite to the 200, but came close to 98.3. And then from there, it broke higher. We can expect a similar move of S&P 500. Its 200 is closer to 58, 57. May not quite get to 5800. We'll see how deep it is, but at least a pullback towards 5900 or somewhere in the region of 5850 to 5900 is a possibility. And then from there, right shoulder and a break higher is what we will be watching for. So near term, that's a possibility. And if you look at the NASDAQ 100, which has had a massive move from 401 all the way to 557, massive move in NASDAQ 100 ETF, similar kind of triple negative divergence. Why triple? 3 successive lower highs in RSI as NASDAQ has been printing higher highs. So NASDAQ QQQ recently printed a higher high at 557.6. Last couple of days, Thursday, Friday, it pulled back. Triple negative divergence, as in 3 successive lower highs in RSI. Negative divergence in MACD indicates a possibility that this could also have its right shoulder pullback to test its 200-day moving average, which is rising. This also has a golden cross of the 50 above the 200. Right here, you can see that the blue moving average is the 50, the red is the 200. There is a bullish cross, a golden cross, but that 200 is around 504, 503.92. So pullback to that 504 level, the low 500s, is a possibility. So from 560 towards a 504, you're talking about a 55 point, which is 10% pullback. To form that right shoulder and then a breakout higher is a possibility. So both, just like the Bitcoin did, a pullback to test its rising 200 and then a break higher, we could, and that was the leading indicator, it did a month and a half before. So now might be the time for S&P and QQQ to do its right shoulder pullback to its rising 200-day test and then break higher. The fact that Bitcoin broke higher to higher highs, and that's, as we said, is measured to a target at 150,000. So the bullish momentum in Bitcoin indicates there is going to be bullish momentum in the stock market, likely after this right shoulder pullback. So while many fear that there might be, a very rocky second half of the year, it could turn out to be actually, after the pullback, great opportunities for the stock market to climb higher highs. We'll see where that lands up. A key sector in the space of QQQ in the technology is semiconductors. And we can see the ETF for that, the VanEck Semiconductor ETF is called SMH. This is called a bearish rising wedge. You take the highs and the lows, that's converging. It's almost converging to a point that it's ripe for a breakdown. Typically, when you have a rising wedge, it breaks down to come back and retest from where the wedge started, which is around somewhere around little above 270, 272 levels where the wedge started. So from this 287 to 288, a pullback towards the 272 can't be ruled out. And potentially this has also got a triple negative divergence, 3 successive lower highs in RSI as the SMH, the semiconductor ETF, has been climbing. We can see declining volume in the climb. This is all setting up for a bearish move. And the key leading stock in this is NVDA, which is a poster child of AI. Many call him the king of AI. And that is also setting up with respect to shooting star candle. When you have a higher wick on the top of the body, a small body towards the low end of the range, that's called a shooting star candle. That's what it printed on Friday. Higher high, slightly lower high on RSI, so negative divergence as NVIDIA has climbed RI. Now, how low could NVIDIA pull back? We think that 143 level, which was the high of February that it tested in late May, broke out from it, would now be a huge and key support. So we see that the 50-day also here has a bullish cross above the 200, but it's climbing. That's in blue. It's at 139.5. By the time we get the pullback, this likely reaches 143. So we expect that if any NVIDIA maybe pulls back to retest that 143 level, that would be a great test for it to then remount. And if you measure an upside on NVIDIA, that's a 143 down to 86, up to 143. That's 130, 37-point move. That's the depth of the cup. So 143 to 86 to 143. So that's 37 points. Sorry, it's not 37 points, 57 points. So 86 plus 50 is 136 plus 7, 143. So 57 point is the depth of the cup. Add that to 143 plus 57 is 200. This is a beautiful cup and handle, by the way. A cup from 143 to 86 up to 143, kind of a converging, kind of an ascending triangle, kind of a handle, and then to break out, that measured target is 200. So we think that's where NVDA is headed. So there is more upside in NVIDIA for the bulls. I would hold on, expect the 200 for an upside in this next several months. But near term, that pullback to that 143 is a possibility, unless we just have a breakout rally and continue climbing without any pullback. Anything's possible in the momentum that we have in the market, but we are expecting that pullback in QQQ. So in summary, what we feel is Bitcoin had a massive breakout. We feel that it's got its upside to 123,000. From there, a pullback to retest that rising trend line or the neckline near, which might rise up to 113, 114 is possibility. And then the 10-year yield is what we are watching. That's where the smart money gives indications where the interest rates and where the long-term treasury yields are headed. That breakout from 4.4 towards the 4.66 would be bearish for stocks. So we think this breakout higher in 10-year yield would follow with a volatility increase. We expect to see volatility to go higher. It's a typical pattern in the last few months. From the mid of the month, volatility goes higher. We saw that in mid-May, mid-June, and now in mid-July, setting up for a higher volatility coming up next week. And with the volatility move, we expect the S&P from its negative divergence to pull back to test its 200-day moving average like Bitcoin did. This is closer towards the 5850, 5900 kind of a pullback. And the same thing with the QQQ, the NASDAQ 100 ETF pulling back towards its 200-day, perhaps near the 502, 504 level. So that's got a triple negative divergence. Semiconductors are ripe for a pullback, a bearish rising wedge pattern. So that pullback would lead out of the leading stock in that semiconductor, NVIDIA, ended with a shooting star candle that pulled back towards the 143, which would be the rising 50-day moving average. Could not be ruled out, and potentially a great entry point for the bulls looking to play a move of NVIDIA from that 143 to the 200. So with that, good luck investing. We'll talk to you next week. Thank you.